Thanks for joining me for my weekly outlook. This is the outlook for the week of January 22nd. We'll be covering the S&P 500 and Nasdaq, copper, and soybean meal in today's weekly review. Let's get into the charts. Okay, we're going to start off today with the Nasdaq QQQ ETF. We're in a very interesting position heading into the heavy earnings this week and the following week. We had our rally on Friday, which is bringing us right back into this resistance area that we have not been able to break. So the setup is not looking great heading into earnings. We did get a nice Willaims %R trade on Thursday and, of course, gave us a great winner for the Friday rally. If you haven't seen the Willaims %R in the Trader's Toolbox, go check it out for more details there. But my other concern this week is, other than that we have earnings coming out this week and next week that are going to move the market, is we're also in a seasonally weak area. In fact, should be starting right here, right now, a move lower up until the tax time trade that comes up here in the middle of April. So from a seasonal perspective, it's looking down. From a chart perspective, we're in an area of resistance. So unless we have some great guidance or earning surprises coming up in the next couple of weeks, the market might want to make a move lower. But as you can see here, we're starting to trend higher. So it's going to be a very interesting week for us when it comes to the QQQ. And when we go into the S&P 500 and we have the SPY ETF here, you can see a similar setup. We're right back moving close to our resistance areas here around 400 or 4,000 if you're following the index. Been stronger, the S&P 500 has been stronger than the Nasdaq, but same scenario, lots of earnings, and the seasonal pattern says it's time to start moving lower. So same setup for S&P 500 and the Nasdaq, in my opinion, for the next couple weeks. Caution is warranted, but there could be some great short-term trades out there if you're looking for them. With that said, let's move into the commodities, and we'll start off with copper. All right, now let's jump into copper. We have some interesting technical and fundamental things going on with copper right now. In the last 4 weeks, the Shanghai deliverable copper stocks has gone up 156%. This is an enormous move in just 4 weeks. And you could say it was attached to the China reopening and a possible need in the future. But we have the Lunar New Year going on right now. And it looks like it's probably going to cause a pretty heavy spread of COVID within China. So, that's going to slow down production in the factories. And from a technical perspective, right here I'm looking at the premiums of the front month versus the nearest contract in copper. And despite this 4-week move, the actual front month premium in copper has been going down during this period. If demand was truly going up in copper, we should have seen the front month move higher, and we have not. Possible bearish sign. In addition to that, if we take a look at the COT report, you can see here as well, same time those premiums have been going down, the commercials and the producers who actually use copper have been selling. So China increased their inventories, but this open interest, especially here this last week, has been driven heavily by small speculative traders. And unfortunately, folks, us small traders are usually wrong at this. If you're long copper right now, probably a good idea to keep tight stops on your copper, because in addition to the COT report and the heavy selling coming from producers, copper is overvalued against gold, the dollar, and bonds. And keep in mind, this overvaluation of gold is at the same time that gold has been going up. As everyone knows, I'm not big on gold, copper, or silver right now. Take a look at my video specifically on the gold and silver from last week. And the last piece here that's kind of interesting is True Seasonal Daily shows that seasonally speaking, we have a dip in copper right now during this time of year. And with it aligning with these technicals and the fundamentals, if you're long copper, keep those stops tight. And we may have some short selling opportunities coming up with copper. Okay, and the last thing we're going to take a look at today is soybean meal. Once again, we're looking at the COT report here, and we are looking at heavy commercial selling, but even more importantly, enormous long position. This is actually an all-time high long position for the fund traders. This puts them subject to a very possible long liquidation period that could last weeks if we get a break in soybean meal. So that's why I'm going to be keeping an eye on soybean meal here, because if we break lower, these funds are going to start liquidating, and with their current open interest levels and all-time high long position, a break lower could lead to a very fast move lower in soybean meal. In addition to this, I'm not going to show the chart today, but we did have a DeMark 13 sell that came in about 8 days ago. And the last thing to take a look at is on the weekly, we did get the cross of the slow stochastics here. If you've watched my ADX video, you know I look for calling a top when it reaches 60, so we're not there yet. So we could get this long liquidation now, or it could last a couple more weeks and we can move up into the 60 range. But it's definitely something I'm going to be keeping an eye on this week and the coming weeks to see what happens in soybean meal. Thanks for watching Just Some Guy Trading. If you've liked this content, please like the video and subscribe.